Aloha everybody and welcome to Facing Our Future, our weekly show where we take a look at topics and challenges facing us and our future in Hawaii and across the world. Today we're going to delve into an area that perhaps is probably the most confusing but yet permeating in our lives, and that is insurance. Whether you drive a car, whether you go to a doctor, whether you go ahead and want to provide for you and yours, the world of insurance will touch you. What issues are in insurance? What should we be aware of? And how can we get over the high cost of insurance or what seems to be challenges of obtaining insurance today? And along those lines, I'm joined with our very special guest, Gordon Ito, the Insurance Commissioner for the state of Hawaii. Aloha, Gordon.
Aloha.
Thanks for being here.
No, my pleasure.
Oh, thank you. He says that with a grin on his face and a twist in his arm. But yes, first of all, for our viewers out there that may not know what an Insurance Commissioner is or does, what exactly is the office of the Insurance Commissioner?
Well, the Insurance Division, we're a part of the Department of Commerce and Consumer Affairs. I kind of like to joke that our breadth of responsibility is quite large because now it's probably the largest volume in the HRS. And I always refer to our insurance division is responsible for regulating the entire industry, the insurance industry, ranging from property and casualty, auto insurers, homeowner insurers, workers' comp, health insurers. So we have a wide range of responsibility, and it really starts from the initial part where companies apply to do business in Hawaii. Unless they get a certificate of authority from our division, they can't do business in Hawaii for the most part. And we also license insurance producers. One of the most important thing is really monitoring the companies for financial solvency to make sure that if you have a claim, your claim will be paid. And, we handle consumer complaints about insurance. So we do a whole range of things.
You also do reviews of rates before they're published or enacted?
Yeah, so that's another centerpiece of the insurance division. We do rate review for homeowners, motor vehicle, workers' comp, as well as health insurance now. We also do farm review. We make sure the farms are in compliance with the law and the requirements of the law. So that's another aspect of our rating policy branch. We have a examination branch that does solvency review. We have our it's our compliance and enforcement branch that handles complaints. We have a licensing branch that license producers and monitors their continuing education. We have a captive branch, health branch, fraud. We also do insurance fraud. So if you know anybody committing or think they're committing insurance fraud, you can contact our fraud branch and they'll do an investigation.
So it's a huge, you're right, it's quite a wide range of responsibilities. On the certificate of authority, some may say, well, why do we need this? Why not just let all these companies come in and won't that competition just reduce prices and offer better service for consumers?
Yeah, there are over 1,000 insurance companies licensed in Hawaii. I don't think people realize that because just maybe 20% of them actually write. But with respect to competition and going back to your question on certificate of authority, we want to make sure companies that are admitted in Hawaii are financially strong. Because if we admit companies that are not and they go under, then your claim's not going to get paid. So the starting point, we want to make sure companies in Hawaii are financially strong and solvent. So that's why we review their applications.
Do you also look at, if they're operating in other states, like some of these companies you see on late night TV infomercials, do you look at their history as far as consumer complaints and state actions against them as well? Or?
Yeah, yes, we, again, if you have a complaint against a company licensed in Hawaii and doing business, you can come to us. We do look at the complaint information. In fact, we have three, I would say, rate and comparison sheets or premium comparison sheets for homeowners, motor vehicle, and now we have one that we're doing for health. And like the motor vehicle rate comparison sheet, there's also a complaint ratio. So you can not only compare the rates for motor vehicle insurers, but you can see which insurer has the most complaints.
Oh, that's a really good tool for people to have.
Yeah, so we do that also.
Well, that's on your website. So you publish the rates then from all of the carriers on your website. Yeah. So the public then could be able to come in there and look at them and see not only, you know, price and what you get, but also, like you said, history of complaints.
Yeah, and our website is www.cca.hawaii spelled out .gov/INS for insurance.
Excellent. Well, one of the big areas is, of course, health insurance,
Yeah.
and one area in which has become a challenge is the ACA Obamacare, as is known in the Hawaii Health Connector. There was a court ruling that happened yesterday. Well, two courts came out with rulings. One said that if federal exchanges cannot go ahead and offer tax subsidies anymore because it wasn't written in the original law, and then the other court said no, you can't through the power of agency. How do you think that these rulings, especially since it's going to the Supreme Court, may color or perhaps guide the ACA and the connector in Hawaii?
Well, the fortunate thing with those challenges is that Hawaii created a state-based exchange or state-based marketplace as opposed to going to the federal marketplace. And so the challenge was really against those in the federal exchange and saying that those purchasing health insurance from the federal exchange, the individuals are not entitled to the subsidies. But they left alone the state-based exchange because within the law, it's clear that for state-based exchange, the subsidies was intended to apply.
Yes, under that.
Yeah.
So basically, you know, because we do have a state exchange and we don't have this federal exchange, despite the people calling for it repeatedly, we don't have this issue. So people, you know, for instance, small business people who purchase insurance, people who are part-time workers who have insurance won't be in jeopardy of seeing their rates suddenly rise through the roof because the subsidies will no longer be available, right?
Yeah.
But eventually, you know, one of the issues about the connector has been, you know, the idea of shop and compare on the website, of bringing in the providers to look at how valuable is that? I mean, I mean, is that a very important tool that businesses and people can use, or what's the?
Yeah, you know, the unfortunate thing with the Hawaii Health Connector, more than anything, is that it's had its IT challenges, as everyone knows. If it was implemented correctly on IT portion, then I don't think we would be discussing the connector. But going to your question more specifically in terms of plan comparison, the exchange, the Hawaii Health Connector offers more transparency. For individuals, for HMS and Kaiser, which are the two participating insurers, you can go through the connector and compare rates for the different plans. It also provides for a guide to benefits, so you can look at what's contained within the plan from plan to plan and between insurer to insurer. And similarly on the shop, which is really for the small business, 50 employees or younger, they have the ability to go to the connector and shop and compare, look at the plans, compare coverages, compare the price more than anything. And so the part of the main objective for the exchange is really to create more transparency.
Does that dovetail or intersect with your efforts to publish these rates on the insurance commissioner side, or for the health area, are you leaving it on the connector end?
Yeah, and thank you for bringing it up, and thank you for the legislature for passing a bill that we had introduced this year, requiring all health insurers to provide for health information, well, in particular the premium. So we had one that was created for HMS Kaiser because they participated on the exchange. The law provides us to get additional rate or premium information from the three smaller health insurers. And so small businesses will have the opportunity to compare rates for all health insurers in Hawaii.
All providers on your website, right?
Yes.
But on the connector one, it would only be the two health providers that are on there, correct?
Yeah, but so our intent was to, because the three smaller insurers are not on for small businesses to be able to go to one location and really compare price on the ACA plans. And so we're working on doing that and getting the publication up as quickly as we can.
See, that's the thing, is that you look at the ACA plans on there. What would you say to somebody who says, like, look, I don't want to, you know, I'm going to stay on my own plan. The president said I can keep it. I shouldn't be bothered with this. Is there any, I guess, is there any reason why somebody who is on their plan should look at these plans, and what benefits may they have?
Yeah, that's a very good question, and we're trying to get the message across that, you know, as we all know, as we were heading to 2014, starting from 2014 for individuals and small group, it was only going to be ACA plans that's age rated. But in the middle of November, the president came out with a directive saying that those insurers that want to offer or continue to offer the current plans that individual and small businesses have, that they could do and continue to do so. And so that really created, in my opinion, the best of both worlds for individuals and small business, because they could choose to stay in their individual plan, which is based on really your loss experience. If you get sick or you have some kind of major medical issue, your rates are going to go up.
Yeah.
Right? Unlike the ACA plan, which is based on age, but if you get sick or have some kind of major medical, your rates are not going to up except for as you progress up and get older, right? And so there's pros and cons with each, and we're trying to get everyone to understand, for individuals and small businesses, that they should really shop and compare what the pricing they're paying for in their current plan, if they're still with the plans they had in 2013, and look at what would cost if they went to an ACA plan.
But then wouldn't that actually also the employer should look at the average age of their employees too, because that will be the big driver in cost to the business.
And that's a misnomer to a certain extent, because you could have a small group that have very bad loss experience, where the rates would actually be higher, in their 2013 plan rather than the ACA plans, right? So there's so many factors involved in terms of the pricing under your 2013 plan, and the ACA plan. So that's where we encourage individual and small businesses really to look at what you are paying for 2013 plans, your old plans, your transitional grandmother plans as it's referred to, and really try to estimate how much it would cost if you move to an ACA plan. The only caution is, once you move off from your 2013 plan, you never can go back.
I mean,
you can't go back.
You keep your plan while you have it, but if you move off, it's gone.
Yeah, and right now you can't keep your plan in your 2013 plans all the way through 2016 and into part of 2017.
Right now, but of course the federal government, and changing everything every day, could continue to extend it out. But for business, then you would need to look at what your rates are under your particular loss experience, and then compare it to the connector to these ACA plans, even though they may be age-based only, because you might be paying higher even though you have workers that are older but with more loss experience, going to the doctor more, going to have medical services more. What about companies? Which companies would actually benefit the most from the ACA age banding, as it's called, rating system? Are there any type of groups that would have an advantage, or be able to do things for their business through these plans?
Well, for small group, as a general rule, because it's based on an age curve, the younger employees pay significantly less than the older employees, and so as a general rule, if your business had more younger employees, your rates are going to be cheaper, generally. But it really depends on really your loss experience.
So the thing is that for like small startup companies, tech companies, companies that are newer, they could potentially benefit from the age band ACA plans because their workforces would traditionally tend to be younger. Correct?
Yeah, that's correct.
And that gives you a chance of more capital, a chance to kind of meet your payroll and grow with a young company. But are there companies that would see, I guess, a rate hike because of age banding?
Yeah, there's no doubt. I mean, there's companies that would see a raised hike if they went to an ACA plan versus staying with their transitional plan, and that's where we encourage businesses really to look at both options and then make a best decision. The other thing with ACA plans and the Hawaii Health Connector is that for businesses in 2014 and 2015, if you buy an ACA plan through the connector, you're entitled, or you may be entitled to small business tax credit for providing health insurance. And so that's the only way you can get the tax credit currently. Prior to 2014, from 2010 to 2013, small business for providing health healthcare insurance, which if you were doing under Hawaii prepaid, you could qualify for a tax credit without having to buy an ACA plan. And so small businesses should even look at that option and whether they can go retroactive and try to get that tax credit, between 2013 and 2010 to 2013.
There you go. ACA, health insurance, 2 providers on there. Is there a way to bring more value to the connector? And perhaps, how do we look at the rising cost of insurance premiums and health altogether? We'll take a quick break and be right back.
Hi, I'm Donna Blanchard, and I host the show Center Stage on the ThinkTech Hawaii digital series right here every Wednesday from 2 to 3 Hawaii time. I would really love to have you watch the show and see what we do here. I talk with some of the most amazing people, artists, most of them, all of them involved in some sort of artistic process. And our goal here on the show is to dig into that artistic process, and you would not believe what some people say, what some people do, what people go through to express. And these are people who have to express somehow, and I find that infinitely interesting. Not only that they have to express, but how they end up doing it. I really hope that you will watch the show and enjoy talking with some of these people the same way that I do. Thanks, and I hope to see you soon on Center Stage on the ThinkTech Hawaii digital series, Wednesdays from 2 to 3. See you soon.
Aloha, everybody. Welcome back to Facing Our Future, and we're joined today with Gordon Ito, Insurance Commissioner. We're deciphering the world of insurance, a complicated sphere, but in the impacts it has to you and yours, and how do we face the challenges of an insurance world that seems to be changing every day. Speaking of changing every day, we were talking about the connector when we went to break. Mm-hmm. One of the things that connector proponents have talked about is you say, hey, if you go through the small business shop program, you can get bill aggregation, you can do shop and compare. But one of the criticisms or observations is you only have 2 providers on there. Yeah. So do you think that limits the advantage that you would have for the connector, and there's, aggregate billing and there's shop and compare if there's only 2 providers on there?
Well, I mean, realistically, the 2 insurers are the 2 insurers that cover the most small businesses, right? And so, at least at a minimum, it provides small businesses to shop and compare between the 2. Mm-hmm. And it does it in a simple way. Right now, I think the connector with its IT fixes, one of the major fixes, I think, for small business that makes it easier is that you can get a template, load in your employee information, upload it into the connector, and then it'll do a rate calculation for plans that you choose, right? Okay. And you have a total out-of-pocket number. So that will simplify it for businesses, between HMSA and Kaiser. But then they can also go to the smaller insurers and do a manual calculation to see what their net cost would be.
Through your website, through the rate on your website. Well, right. Even though the smaller guys only deal in the business, sphere, they don't do individual. What are the challenges in trying to get? There's obviously a reluctance for them to come on the connector or be part of this exchange portal. What is the reluctance that you see, and why do you think, if ever, will they gravitate maybe to the connector?
Well, I mean, under ACA, the controversial part is the individual mandate and the penalty. Mm-hmm. And so as the penalties start ramping up, I think more individuals who are uninsured will consider purchasing health insurance. But in just the startup, there is about 10,000 individuals who have purchased health insurance, which we speculate or estimate that those individuals who, for various reasons, didn't have insurance or couldn't get insurance, prior to 2014. And so at least 10,000 individuals through the commercial insurance side has been able to obtain health insurance, which is, to me, one of the biggest benefits of ACA. And then there's also the Medicaid expansion, which Hawaii chose to do.
Of course.
That it probably added additional 33,000 individual with the expansion. So there's about 43,000 estimated people who now have health insurance in Hawaii. We estimate that the uninsured population has dropped from 8% to about 2%. which is really great.
8% to 2% or 8% to
Sorry,
5%?
8% to 6%.
6%,
Sorry,
okay.
sorry.
I was at that thing too. That was not what
I was
I heard.
thinking about Massachusetts, that they're estimated to be at 2%.
2%.
Yeah, and so that's that's a target I think Hawaii really should shoot for.
Well, that's a big chunk taken out. But again, though, to get back to the smaller insurers, you have a shop engine, you have this ability to shop and compare through this algorithm. It would seem to me that to try to get these smaller, even though they do business only, onto the exchange would benefit the businesses that are on the exchange, right? So they could do true shop and compare.
Yeah, ideally, I mean, all insurers would participate on the exchange, and that small business individual can really get the whole range and be able to shop and compare for it with everyone at ease. And that's the ideal. I think it goes back to, again, the IT and the technical challenges the connector has. The law, ACE, is extremely complicated. I should have brought the Hawaii prepaid little pink pamphlet.
Yeah.
And and ACE is thousands of pages.
It's this big. I mean,
tens of it's huge, and so. That in itself has been a challenge, and part of the unfortunate thing I think with ACE is that because of the exchanges and the challenge that they have, people forget that ACE is it's way beyond just the exchange. Like for example, no pre-existing medical condition exclusion, that was prohibited. So anybody who now wants to buy health insurance can buy health insurance. In 2010, what I call the fall 2010 mandates, there was a whole slew of ACE requirements that went in place. Probably the biggest one in the fall 2010 was that children, well, I want to say children, but people up to age 26
can now stay on their parents' plan.
Exactly.
Right? And that's huge for Hawaii, where you have so much multi-generational, families living together. So that was a big advantage for Hawaii. The other advantage, it seems to be, is these plans tend to be what they call more benefit rich, the ACA plans, right?
Well, originally I think ACA and the federal government, and that's the other thing that people don't realize, that with ACA, it really preempted a lot of state requirements. For nearly 150 years, insurance was really in the purview of state. Each state regulated state insurance, including health insurance. ACA really preempted many of the provisions, and so that's been a challenge in trying to mesh in, ACA with our prepaid. But talking about benefit, going back to your comment in terms of benefits, I think originally ACA was intended, or the federal government was intended to create one uniform standard, where they have what they call the 10 essential health benefits, and then the benchmark plan. And I think originally the intent was to create a uniform standard throughout the United States, because what people don't realize in Hawaii is how fortunate we are with respect to health insurance, because of prepaid, our benefits are extremely rich. If you went to other states, that's the common thing that we hear about people moving to Hawaii and they buy health insurance or get health insurance through the employer, that they can't believe how many benefits they get. And yet Hawaii premium, although you and I and everyone else thinks it's extremely high, and it is getting high and continues to get more costly, compared to the rest of the other states, our premium is relatively, I want to say low, but it's really towards the lower side. But yet we have very rich benefits.
Very rich benefits for these rates that we're paying. But you hit the big nail, I guess, big enchilada, for lack of a better word. And it came to a point when the recent rate increase was petitioned. And while you didn't give them the 12-something% they were seeking, 8%, the fact is the rate increase was given because the cost of healthcare has gone up in that time.
And that's the other message I'm really trying to get across to everyone, small business, large businesses, individual, is that, and going back to the rate filing that we just had reviewed for the small group for HMSA, the community rated group. HMSA came in with a 13.1% rate increase. That within the 13.1%, 4% were really for ACA fees. And so ultimately we approved a rate that was 8.9%. there was about a $21 million savings to small businesses because of that rate reduction. What I try to tell people is out of the 8.9%, 4% were for the ACA fees. So effectively, we
So the
approved
ACA
about,
could technically be driving up the cost
well,
of insurance.
temporary, because again, there's these fees are trying to, again, create some subsidy. It's trying to create more health reforms. You know, which ultimately will drive down, hopefully, the cost of health insurance. And so that's, I think, one of the biggest challenge Hawaii has, as well as the nation, is that health insurance costs is greatly outpacing our inflation and wages. On average, every year, the health insurance, I should say, health costs, okay, is increasing by about 6 to 9% a year. I have this graph that I like to show that it goes like this. You know? And so that's something that we really need to bend. What you often hear, we need to bend the healthcare cost curve, right? And as a result of the increasing healthcare costs, the healthcare insurance keeps going up, right? It's like gas. I mean, if a barrel of oil goes up, you know, your gas
Goes up, exactly.
gas
And this
goes
is
up.
the thing. So what are some of the things that you're looking at or have emerged as the big drivers in healthcare, other than the fees of ACA? How do we start to bend this curve back down? Is there any preliminary ideas on this?
Yeah, I mean, there's things that the ACA is already doing. I mean, in terms of putting some requirements on the hospitals to reduce readmissions, for example. Within Hawaii, the governor's office has the healthcare transformation. Beth Giesting is the healthcare transformation coordinator. She's gotten the state innovation model grants, planning grants, and so they've looked at various areas in what we can do to bend the cost curve and you know, proceeding ahead to implement it.
Well, one of the cost curve things, actually, when you talk to the hospitals, the ACA readmission penalty is causing, in their words, is causing actually driving costs up, because they're now unable to, you know, when they release the patient, if the patient comes back within 30 days, they're going to be penalized for it, so they tend to keep them longer, and they need to free up those beds for more critical access, higher reimbursement patients coming in. So do you think that even though it's supposed to bring down the cost of healthcare, do you think that this kind of scenario playing out in the real world of Hawaii could actually continue to drive it up?
Well, I mean, that's where I think the state really has its biggest challenge in how do we address all this. We have a very complex issue, you know, and that's something I think we all collectively will have to look at, you know, in terms of what can we do. I try to stress that it starts from you and I, you know, taking better care of ourselves.
As he says with a cough.
Yeah. You know, and also, I mean, you talk about, you know, people should really go to their primary or have a primary care physician, get periodic checkups to avoid major medical issues from arising. You know, and so that is really, I think, one of the things that we all have to start doing.
Well, one of the other, I guess, drivers of health insurance is, of course, when you have people who use the emergency rooms as their first line of primary care. And in particular, where you see it starting to emerge and the data is still inconclusive, is in what they call the COFA, or the Micronesian population, as well as, which we discussed on an earlier show a few weeks ago, the homeless population coming in and using the emergency room, not having. Is there any advantage to the state looking at trying to move some of the COFA or some of these people onto commercial insurance? And is there do you think that effort would ever be successful, or do you think it's going to be limited?
Yeah, I mean, that's an issue that crosses departments, so, you know, I'm not necessarily an expert on that. But, you know, again, with ACA and reducing the uninsured population, I mean, that's one of the very things that you're trying to do to get people insured, to get people to have regular checkups, to avoid the emergency room visits, well, in particular with those that don't have insurance. And so somehow, you know, that cost has to be spread among everyone else that is insured. And so those are all the types of issues that we really have to work collectively together.
Yeah, because it seems like when you carry this large uninsured population, the more uninsured you have, using the emergency rooms, the higher healthcare costs are going to be, particularly in the neighbor islands where your options are limited as far as having a primary care physician going on, right?
Yeah, and and really the most important thing is really the person itself and being able to take care of yourself or being able to get treatment, right? So you can talk about insurance, but the best thing about having insurance is being able to go to your doctor and get treatment. I mean, I hear some horror stories about people who couldn't get insurance or was insured, but their plan wasn't adequate, so they didn't seek medical treatment, and then their condition was really bad. And so.
Well, we're going to go ahead and take a break real quickly here from our sponsors, as I like to call them, but we'll be back to talk more about insurance. Is a hurricane coming? Are we ready? We'll be right back.
Okay, this is ThinkTech, and one of our favorite shows is Hawaii, the State of Clean Energy. And it goes 4 to 5 every Wednesday right here from ThinkTech in Pioneer Plaza at the core of downtown Honolulu. And my co-host is Ray Starling from Hawaii Energy. Ray, do you like the show?
I love the show. It's great to see all the new people coming in with new ideas about how to save energy, get us off of fossil fuel, and that's what it's all about. So Hawaii, the State of Clean Energy, see us on Wednesday afternoons at 4 o'clock.
I knew he'd say that.
Thanks, Ray. Aloha, everybody. Welcome back to Facing Our Future. And yes, we are talking about a subject that normally puts Z's all over the walls, insurance, but something that is very important, whether you're in business or whether you have a family to take care of. Insurance and how you get it could mean the difference between being able to handle issues in health, your property, and your home, as well as being able to move forward as a community. And speaking of your home, one of the issues that has come up probably with the former Hurricane Wally moving to the neighborhood has been hurricane insurance. Many years ago when Iniki hit, the insurers fled the marketplace, for lack of a better word. So Hawaii stepped in and created this Hawaii Hurricane Relief Fund, which was, I guess, the insurer of last resort. If you couldn't get any other policies, you could then go to the Hurricane Fund to get your insurance, right? So when this program shut down, there's still a perception. A lot of people are like, hey, I paid into it, or I had a program. This fund is needed so that in case there's another hurricane, it will go ahead and pay for my losses. I mean, is that an accurate representation of the Hurricane Fund and what it could do, or what exactly did the Hurricane Fund do?
Back in Iniki, many insurers stopped writing. Not only homeowners. At that time, in '93, many of the homeowners policy actually covered you for hurricane. Mm-hmm. That's not the situation today. It's really by insurer by insurer. There are some insurers that you can buy a homeowner's coverage as well as your hurricane coverage. But there's also a lot of insurers that do not write hurricane, so you would have to go to other insurers that write hurricane coverage. But going back to HHRF, after Iniki, many insurers not only stopped writing homeowners, they also stopped writing motor vehicle. And so there was an availability issue, which then trickled through the economy. Those that were trying to buy a house or those that had mortgages, because the financial institution require insurance coverage. If they canceled your policy, you would have to look for replacement coverage, which oftentimes you couldn't get, mm-hmm. right? And then it created a situation where you would be placed into an insurance policy that you would pay a significant amount of higher rates. So the state stepped in and created the Hawaii Hurricane Relief Fund, which became an insurer, as you mentioned, as last resort, and they provided the hurricane coverage. The intent of that HHRF was really, if there's an availability issue, then HHRF would continue to provide insurance. Fortunately, with Hawaii, many insurers started writing homeowners again, and then there were specific hurricane riders that were created that provided hurricane coverage. And so a number of years ago, because there wasn't an availability problem, the state shut down the hurricane fund, but we kept, basically the law is on the books, the monies are being replenished to be available in the event that which knock on wood, we don't get another event.
Well,
like
the program,
Iniki.
but the program's sunsetted, has it not? I mean, the funding pool is still there, but the actual mechanism is
Yeah,
sunsetted out.
that's correct. I mean, the HHRF is really dormant. It's sunsetted. There's no HHRF where you can buy a policy.
So people should know that, though, because you hear that all the time when a storm is coming or when the issue comes up. You see letters to the editors saying, "Don't you dare touch the fund. I need that for my insurance for my house." But that's clearly not the case, right?
That's a big. I mean, there's several misconceptions with HHRF. You know, one is that I think probably the biggest is because there was a quite sizable amount of money that the state is replenishing again. People thought, oh, I bought hurricane insurance, so when they deactivated the fund, they thought they need to get monies back.
Yeah.
But that's not, people don't realize that really what they were buying was an insurance policy and the coverage, like your auto policy. You pay every year. If you don't get into an accident, you don't get a refund. Of your premium,
It would be
right?
great if you did.
That's what insurance is.
Oh, but you do see some insurers now starting to do that. The good driver policy discounts and things where they try to give you
a percentage of your
percentage.
premium.
Yeah,
They don't give you.
they don't give you all back.
If you have
Oh,
no
that
loss,
would
you
be
get
great.
everything back. That's not how insurance works.
But true. Now on the fund mechanism though, so then you have this fund. The program is sunsetted. What would you say to somebody who's like, well, you guys should just sweep the fund or make it another rainy day fund and don't keep it for that purpose anymore? Is there a wisdom in keeping that as a hurricane fund?
Yeah, there is a lot of wisdom because with HHRF, it took a while to get it operational because within the law, there's fees that would be collected. Like mortgage recording fee, for example, was one of the mechanisms to get fees to be able to buy, for the most part, reinsurance to cover the risk that the HHRF was. So by having a pool of money available in the worst case event where insurers again pull out of the Hawaii market and we need to reactivate the fund, we can quickly start up the fund to provide insurance as opposed to waiting for fees to be collected and then be able to buy reinsurance to cover.
But do you really think, I mean, if you look at the Cincinnati, and I'm going to be doing some wood knocking here, so in case something happens,
Yeah,
people
like,
don't
no,
email me, go, hey,
wood
but
knocking,
yeah,
yeah,
exactly.
like,
Like,
don't
hey, when you remember you were saying on the show, thanks a lot for nothing. Yeah. But seriously, when you look at the fact that, again, statistically, we have not had a strike, knocking the wood, Cincinnati. It's been over 20 years. Every year, people pay their hurricane policies. There have been 0 claims filed in the state of Hawaii all those years. So one of the figures that has been brought up by, I guess, different groups is that the profit ratio for Hawaii and hurricane is extremely lucrative. 90 cents out of every dollar goes back to the company potentially as far as profit. There's only 10 cents spent in Hawaii because there's no claims made. So do you think that because of this, that number one, that there's really that they would pull out this bad? Number two is with the rates being as such that they are, that the state should look at, hey, what can we do to bring the rates down because it is so profitable. There hasn't been any claims issued in all these years.
Yeah, I mean, we're constantly looking at that, with respect to the hurricane insurers. That's another misconception because there's no, there hasn't been a hurricane that they're keeping 90 cents. In reality, most of the hurricane riders, what they do or what they've been doing is the premiums they collect, they in turn buy what we call reinsurance. So basically they're buying insurance to cover the risk of the loss. So say they have $1 billion in risk that they cover. They buy reinsurance, so the reinsured covered most of the risk of the $1 billion potential loss. And so they're paying monies out to the reinsurers.
But are they actually paying money to the reinsurers, or is it a contractual agreement that should their losses reach a certain level and they have to tap this line of reinsurance, then the money would be due, or they have to pay every year this reinsurance?
Yeah, they have to pay every year.
Every year. Now, do they report that to you guys? Do you see how that they're actually paying? What lines of reinsurance that they're getting for Hawaii?
We see how much they're paying out for reinsurance costs, and so. Although there's no claims, I mean, they do have costs that they incur to cover that risk.
But so the reinsurance, though, is the big driver. So if it's not 90 cents to the dollar, what is the profit ratio? Not to put you on the
that
spot.
I can't say. You
Yeah,
know,
okay.
right on. It varies from company to company.
You know, it does. But
but
there's an average, I mean, medium.
I can't say right offhand. You know, in terms of what the actual profit margin is.
But it's something that you look at, though, right?
Well, definitely, and it is a concern. We're looking at different ways that we can try to bring down the HHRF, well, not HHRF, the hurricane coverage costs. Yeah.
Well, then that's critical, because that's part of when we talk about affordable housing and housing costs. Of course, is the insurance, for housing, and now you have the issue of homeowner policies, and we're sliding into that area right there. One of the things that comes up is people is the area of flood. They'll have a flood on their property. They'll call their homeowners insurance, and they'll find, hey, you know what? This isn't covered by flood at all. I mean, do people need to really be aware of the fact that flood is a separate animal, and what are the types of issues and risks involved in the flood program and flood insurance?
I'm glad you brought that up, because people are under the misconception that if I got a homeowner's covered, I'm covered, right? And homeowners insurance does not cover flood, nor does it cover hurricane.
Yes.
Right? And so those are the two other coverages that they really have to understand, that if like they're in a flood zone, they buy and they have a mortgage, they know they have to buy flood insurance. But many people don't realize that they could be subject to a flood, and there's a need for flood, even though they're not buying.
Now, what about this? And this is probably a real world situation. Many ask. I have hurricane insurance. A hurricane hits, hopefully not, and my house gets flooded. Does the hurricane insurance that I have in my house cover that, or because the damage is floodwater damage, is it now out and under the flood insurance?
Yeah, generally it's if it's really flood, storm surge, the river overflowing. If you don't have flood insurance, it's not going to cover, even if you have homeowners and hurricane coverage.
Even if the flood is generated by a hurricane activity, it wouldn't necessarily apply, right?
So that's something I think everyone has to understand, and really contact your insurance agent to get a good understanding of what coverages it provides.
But and the other thing too that you brought up, which is is important, if you're not in that flood zone area in the flood maps, you aren't going to be necessarily aware of this, but you still could be wiped out from a flood.
Yeah, I mean, and that's in going through the civil defense disaster assistance, and I mean that's very the heartbreaking stories, and for us the most difficult thing to have to tell people like they don't have coverage, but that maybe their only option is getting a loan. I mean, like for example, the Manoa flood. I remember a student coming up to me and saying, well, I have an automobile policy and it covers everything, but in reality all she had was a basic no-fault policy. Her car was flooded, was actually one of the cars in the Manoa stream, but she didn't have comprehensive coverage. So her car auto policy didn't have coverage to fix her car. And so that's where the importance of consumers to understand what coverages cover, and to make sure you have the proper amount of coverage.
Is that one of the biggest issues you see from the division, that a lot of, I guess, comes from people not understanding, or the limitations of their policy or the benefits of their policy, like in the case of the person from Manoa buying the no-fault, thinking, okay, I'm covered under this auto policy, when in fact there's a whole list of exclusions. Do you assist in that effort, doing educational outreach or other types of things to get consumers to look at the fine line and help them understand how?
Yes, and, they're welcome to call our office at any time if they have questions about their insurance policy or coverages. On our website, we have information: homeowners, motor vehicle, health insurance, life insurance. And so they can start there. But more than anything, people are welcome to come. And ironically, some people think when I go around and do presentation, they think I'm trying to sell insurance. The insurance division is not here to try to sell insurance. We're just trying to help you understand what your policy covers.
Well, in essence, but technically you are selling insurance, because what you're selling through your educational process is the need why you should have insurance.
Right.
And I think that's really the big thing to come home to for everybody, is that while it's complicated, a bit dry, and ever-changing like quicksand, the undeniable fact is that people, if they don't have insurance, they could suffer much more and be in a much more disadvantaged situation, right?
Yes, exactly. I mean, they could suffer catastrophic loss that in some cases may end up putting you to bankruptcy, and so that's the importance of having insurance.
So even, you know, while it's a competitive thing with the electric food and everything, that insurance premium you pay could, in the end of, you know, a very bad thing happening or several bad things happening, be pennies to the dollar, right?
Yeah,
In trying to
exactly.
recover from something like that.
Exactly.
As long as, of course, when a claim is made, is paid quickly. And just finally, you know, touch upon that. Do you guys also look and enforce, you know, when claims, you know, are paid, making sure they're paid properly and on time, and, you know, to take action against those companies that don't?
Yeah, exactly. That's our Article 13. Unfair claims.
Well, there you go.
Practices that, if you have a complaint or a question, you know,
Contact-
contact our office.
Contact you there. Well, Article 13. Well, there you have it. The world of insurance. Confusing, a little bit dry, but very, very important. The pennies you spend today could mean dollars saved tomorrow. But costs are going up and the challenges are ahead, and we have to make sure that the world of insurance doesn't become one where the benefits outweigh the immediate costs. Once again, I'm Angus McKelvey. This is Facing Our Future, and again, we'll join us next week, Wednesday, for another topic as we move forward and face our future. Aloha.